Bitcoin is big tech without all the risks of big tech. The company's stock was 120 when we started this journey, and we had $60 a share in cash. And we were under a lot of pressure to return that cash to the shareholders because, the S&P is up 40% over the year. And so if you actually sat on 500 million in cash for a year instead of investing in the S&P, that's a $200 million loss. So I could see that clearly. I mean, some people don't see that clearly, but it couldn't be clearer now. If you look back, a 40% gain in the S&P over 12 months is the message that the currency devalued 40%. So we had to do something. So we could have just returned the 500 million in cash. We would have had $60 a share. We would have a company growing 0 to 10% a year with $60 a share, and no one would know about us. The shareholders, I don't think, would be better in that regard. I mean, I'm looking right now at the stock and it's showing $675 a share. 11x. I could have been $60 a share trying to get to 100, but we're now at $675 a share. So what did we do next? Well, the stock doubled, and then we sold a convertible note that converts at $398 a share. That was unsecured. So that convert is $650 million of debt, but it yields 75 basis points. So, take less than 1% of $650 million, $5 million a year in interest. Okay, so I agreed to borrow $650 million at $5 million a year in interest. We generated $115 million in cash flow in the last 12 months. Okay, it's a $500 million company generating 80, 100, $110 million in cash flow a year. So I basically take 5 million of it, I borrow a bunch of money, and I got to invest in something. Now, people think like the entire world, Scott, revolves around people doing debt and equity financing to invest in businesses. Every building in the world was debt financed. Vegas is debt financed. Right? Every company is either equity or debt financed. The entire cable industry, the telco industry, the airline industry, the railroad industry, right? They're all debt financed. So using debt to grow a business is business. That's why Wall Street exists. That's why there is hundreds of trillions of dollars of equity and debt floating around. We did the first financing, the convert, then we did the second convert. And the second convert was we borrowed $1.05 billion at 0% interest. Okay, so if I walked up to you right now and I said, Scott, I will give you $1 billion at 0% interest for the next 6 years, and you can invest it in a business of your choice. You either have a business that you are bullish on or you don't, right? First question, would you take the money?
Of course.
Of course you take the money. Okay, McDonald's, has debt. Find me an S&P 500 company that doesn't have some debt. Like maybe a few, but it seems like if someone wants to loan you $1 billion at 0% interest, you would invest it. So the question is, what's the least risky thing you can invest it in? I happen to think that that Bitcoin is big tech without all the risks of big tech. So if I offered you $1 billion and at 0% interest, would you buy the S&P 500 index with it?
Not now.
Now it's looking risky, but if you'd done it a year ago, it's probably a good idea, right? And if you had actually done it 6 months ago, you still would be up. Would you buy big tech, Apple, Amazon, Facebook, Google? Well, they're all all-time highs right now, I think. I think that if you asked any investor in the world, would you borrow $1 billion at 0% interest to invest in your investment strategy? If it was fixed and it wasn't marked to market, then I think they would say yes as a general rule. So what we did there was kind of obvious. And then the last financing we did was the stock was down $400 a share. And we could have sold $400 million worth of equity, but it would have been 10% dilutive, and bought Bitcoin with it. But instead of that, issuing 400 million in debt at 6 1/8% interest doesn't dilute the common stock shareholders, and it doesn't dilute the convert holders either. And so would you borrow money at 6% interest for 7 years? Well, if you thought that the thing you were investing in was going to go up at more than 6 1/8%, you would. I did a survey on Twitter and I got 120,000 responses. And it was 90%. I asked, do you think Bitcoin's going to go up more than 6 1/8% interest over the next 7 years? It was very, very precise. Happens to be aligned with that bond. The answer is 90% of the people on Twitter that follow me think, yeah, it is. So there's the 10% of people that I guess that are, if you don't think Bitcoin is going up 7% a year, then I guess you're short Bitcoin. It turns out that MicroStrategy is a publicly traded company. We have gone through a lot of work, a lot of shareholder relations work to rotate our entire shareholder base to be long Bitcoin. There's no one that owns MSTR stock that hates Bitcoin, right? Right. And, by the way, when I started on this journey in August, in July, I put out a press release, and the press release was, we've got 500 million in cash. We think we need to buy some asset as an inflation hedge. And so we're going to buy 250 million worth of an asset, and we're going to return 250 million worth of cash to the shareholders over the next year. Okay. And then a week went by, the stock was 120. It traded 20,000 shares a day. No one noticed. No one cared. We're going to buy 250 million of your stock back. Nobody cares. 7 days later, we accelerated it. We have a Dutch auction. We're going to buy 250 million worth of your stock back at up to $140 a share at a premium. And we just bought Bitcoin. Now 20 days goes by. Everybody that hates Bitcoin, that short Bitcoin, either got to sell above 140. They sold between 140 and 155, or they got to sell into that tender offer, and you get to get off the train. You don't have to be invested in the company. And at that point, we had substantially rotated our shareholder base. The way I know we rotated our shareholder base is we only had $60 million of shares tendered. Right. If we had had $250 million of shares tendered, you couldn't be sure that you bought out everyone that disagreed with the strategy.